In 2019, one company was worth more than Boeing, Ford, and Marriott combined. It didn't manufacture anything. It didn't own any technology. It rented desks. And the man who built it charged his own company $6 million for the rights to the word we. The investors paid it. The question isn't how WeWork collapsed. The question is how it ever got this far in the first place. Strip away the branding and WeWork is simple. You sign a long-term lease on a building. You renovate it. You rent out desks by the month at a markup. That's it. That's the business. Real estate companies have done this for decades. But in 2010, Adam Neumann had a different pitch. He wasn't renting space. He was elevating the world's consciousness. He wasn't building offices. He was building a community. And somehow that reframe changed everything. Neumann was born in Israel, raised partly on a kibbutz. He moved to New York in his 20s with almost nothing. He sold baby knee pads. He failed. Then he found co-working spaces and something clicked. Not just the business model, the performance of it. He showed up barefoot to meetings. He handed out tequila shots during investor pitches. He told employees that WeWork's mission was to change the world. He meant it, or at least he made you believe he meant it. And that distinction almost never came up. By 2017, SoftBank's Masayoshi Son met Neumann for 12 minutes. 12 minutes. Then he wrote a check for $4.5 billion. Later, Son told Neumann he wasn't crazy enough, and Neumann's valuation went up. SoftBank would eventually pour $18.5 billion into WeWork. For context, that's more than the GDP of some countries. The entire time, WeWork was losing $2 for every dollar it made. That number was in the filings. Everyone could see it. Nobody stopped. Then came the IPO. In August 2019, WeWork filed its S-1, the document that lets the public see everything before a company lists on the stock market. What analysts found stopped them cold. Neumann had borrowed money from WeWork, then used it to buy buildings, then leased those buildings back to WeWork at a profit. He had sold stock worth $700 million before the IPO, cashing out while telling employees to hold. He had trademarked the word we personally and sold it back to his own company for $6 million. The company called itself a tech company but had the margins of a landlord and the debt of a small nation. Within 6 weeks of filing, the valuation collapsed from $47 billion to $10 billion. Then 8. Then the IPO was pulled entirely. Neumann was forced out as CEO. He left with a $1.7 billion exit package, a consulting fee essentially for leaving. WeWork then laid off 2,400 employees. Many lost their jobs with no severance. Some had turned down other offers because they believed in the mission. The company that promised to elevate human consciousness had just eliminated the livelihoods of thousands of people to keep the lights on. WeWork filed for bankruptcy in 2023. Adam Neumann is now raising money for a new startup. The $47 billion valuation was never real, but the consequences were. The workers were real. The pension funds that lost money were real. And the question that nobody wants to answer is this. If the numbers were always visible, if the losses were always in the filings, if the business model was always a real estate company in a hoodie, then why did everyone keep writing the checks? Maybe the WeWork story isn't really about Adam Neumann at all. Maybe it's about what we choose to believe when we want something to be true.